Hello, ladies and gentlemen, Greg Michalowski from ForexLive.com. Today's date is May 11, 2023. I'm going to take a look at the Aussie versus US dollar, so let's get started. Let's start by looking at the daily chart. And what we see off this daily chart is that the buyers had their shot. The buyers had their shot above the 100-day moving average. That's the blue line in this chart. Also, that level also corresponded with the 38.2% retracement of this move. So this area right around the 0.67905 broke above it on Monday, broke above it during trading yesterday, but could not sustain momentum. And each day we closed below that level. And trading here today, the price moved just above the 100-day moving average by about 5 pips before rotating back to the downside and eventually moving below the 200-day moving average at 0.67258. That 200-day moving average is now resistance. As long as the price remains below that level, the sellers remain more in control in this currency pair. So sellers are taking back control off the daily chart in the Aussie versus US dollar. Let's take a look at the hourly chart and see how that price action and trading here today materialized. And if we look at the high price in the Asian session, the price moved above the 100-day moving average here. And then again, this was moved up by about 5 pips before rotating back to the downside. It's a quick move above that level. Sellers came in, pushed the price back below the level. The buyers above the 100-day moving average turned to sellers, and we started to rotate to the downside. First breaking below the 100-hour moving average, this time with momentum, unlike these breaks here from the previous day. So we saw momentum to the downside. That momentum took the price back down toward the 200-day moving average. That's this green line right here, the step green line right through here, and moved a little bit below that level before rotating higher and then breaking below it here with more momentum to the downside, which also took the price below the 200-hour moving average, which is moving up toward that 200-day moving average. And here we move down toward the 50% retracement of the move up from this low right here to this high right here. So we are seeing some stall near the 50% retracement. Not unusual to see prices trade above and below that midpoint level. It's sort of the middle of the seesaw where the price is just sort of wandering, trying to figure out whether we go higher or lower off of here. So if we go higher, we're going to look for resistance against the 200-hour moving average. After all, the buyers had their shot above this moving average, moving all the way to the upside, moving above the 100-day moving average, all that, and now we're breaking back below that level. So if you see a rotation back to the upside, I would expect sellers to start to lean against the 200-hour moving average, 200-day moving average before rotating back to the downside and perhaps moving below the 50% retracement level. That's going to be what the target should be on the downside. If we move lower from here, then this swing area over here between the 0.6676, 0.66806 would be the next level to target. And you can see going back in time, this level had more of a significance back here where it was a ceiling, then became a floor here before some messy situation, and then rotating to the downside. So this floor area right here, where this level was established, and then we found some ceiling pressure here and here before rotating to the upside, and again finding support here early against that level. So getting below this 0.6676 to 0.66806 level would open the door for further downside in the Aussie versus US dollar, looking then toward the 61.8% retracement at 0.6666. That's a ominous number, but it's real. That would be the next target on the downside on further momentum. There you have it, a look at the Aussie versus US dollar from a technical perspective. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.